Good morning, traders. Paul with GammaEdge here. Today is Wednesday, the 18th of May. Go ahead, pause your player. Please read this. Important to you, important to us. Starting with the index conditions, we're seeing, as you would expect, a reduction in the net negative gamma for the four major ones that we track. The SPX did fall on the net negative side. Didn't see an appreciable increase on short-term calls in the SPX. For the SPY, did see both a reduction on the net negative side of the equation as well as the net positive gamma side. So this in general is showing that we've got some profit taking going on. We're closing some of those downside puts, and in some cases we're adding some upside. Taking a look at the Qs, kind of the same thing, a minor increase over here on the positive side. IWM showing some monetization on the put side, the net negative gamma. Not seeing an appreciable increase here on the call side. The takeaway from this is that clearly we're seeing some removal of the downside hedges. We think that'll be important as we go into next week. As people look to rebuild those positions, and so we'll want to pay attention to that going forward. Taking a look at the near-term expiries, still between the goalposts. What that means is that we've got a dominant net positive. Note the inversion here: net positive gamma here and net negative gamma here. And you can see those key levels here where we are. It exists in the SPX, the Qs, and the IWM. Does not exist in the SPY. You can actually see we're quite in the money relative to this. These are equity settled, the SPY, the Qs, and the IWM. And as a result, we expect into today some profit taking and closing of these long calls. What that typically means is if they roll them, the spread roll in between the deltas of where they are today and where they're going to will have to be adjusted, and that could put some downside pressure on the SPY, the Qs, and the IWM. So that's the way the mechanics work there. Note, because we are between the goalposts on the Qs and the IWM, we're not expecting nearly the same amount of pressure to the downside as we would expect being on the right-hand side of a dominant gamma level here. So a lot of transition occurs as we go through this 405 strike. Taking a look at the history here, we did see a net increase across the board in all three of the ones that we're monitoring here. I think the key takeaway for us in the SPY is that we actually did not see any change in the overall gamma states. So we've got this negative GEX sitting right underneath the SPY. Any drop here will put these people in a good position to be able to get some profits there. So I think that's important. Taking a look over here at the Qs, we actually did see a drop in the net positive gamma here that you see. We also have the zero GEX dropping. Typically when we see zero GEX dropping, that is a closure of calls to the upside as well as opening of puts to the downside to take better advantage of any potential move upward. We're not seeing any downside things here. So when we see this, we actually think we may be anticipating a slight upward move here, but the drop in the zero here makes us a little tenuous. So kind of a mixed picture. I know that's a little confusing. Just remember though, the zero GEX is like a balance. It's like a teeter-tottering. And when it drops, we have more net GEX relative to positive GEX. But the drop of positive GEX coming down here suggests people are looking for a short-term bump to the upside in the Qs. Here on IWM, you can see that we have maintained the level here with minus GEX coming up. We feel that's fairly significant. Any drop in IWM will put these people in the money. So that 180 level becomes a very dominant level. You can see that we're not seeing a change to on the upper side of this, so there's no anticipation of a broad move upward. We're thinking this is more of a move downward. The flow summary here, what's important to understand is that I've changed this again just slightly. We've got the first 30 days and then after 30 days in the presentation here. So the first 30 days, kind of a flat day for the SPY one way or the other. You can see the puts here, the calls here, net, not really doing a lot. On the Qs, short term, we're actually seeing some calls added in the afternoon. Puts were relatively flat, and IWM, not a lot to see there. Very noisy, very choppy, and the magnitudes are really insignificant. If we look out beyond 30 days, we actually are seeing longer term calls being closed, and we're actually, even though we had a monetization of longer term puts, we saw them added back into the day. This actually is net negative overall, so a little more bearish here. For the Qs, longer than 30 days, we're actually starting to see some of the premium being added in on the put side and calls being monetized. This is net bearish, no question about that. IWM, again, beyond 30 days from now. Mixed picture again, seeing calls being added, seeing puts added and then taken out, but very weak levels here in general. But overall, we would call the beyond 30 IWM picture a little more bullish, but not necessarily aggressive to the upside. Market model, breadth is terrible across the top here. This is not improving, even though we are moving up in the SPX, and when this occurs, this means it's isolated just to a few names. Market maker participation, or the institutional participation, is very flat. Not a lot going on here. I wouldn't read a lot into this relative to market risk off that you see here. We still are in a long-term downtrend, and you can see how little volatility exists in the cumulative tick down here. There's basically, we have a bias upward, but we have no conviction upward. When we take a look at the zeros, this is important because what we're seeing is a continual drop of the zeros. Now, this is what we call a true gamma. This is a price invariant gamma. And why this is important overall is that when we see these zeros dropping, there's only two things that can cause the zeros to drop: either a closing of puts or an opening, closure of calls or an opening of puts. Why that's important is that downside protection, this suggests downside protection is going in, or calls are being closed. So the upside is not anticipated. You can see spot price getting closer and closer and closer to these values. To have any type of sustained bull, we need spot price to be above this, so we could certainly plow through this. We need to see that. We need to see a lot of these levels now starting to come down here, and then calls being opened. So we're not seeing that, and as a result of that, we think this particular rally that we're experiencing this week is short-term lived, and just be aware of that. Taking a look at the 0 DTE, we don't think we're going to move above the 4180 level today. So if you're looking to play anything here, premium right here at the 4185 level or so should be safe. We don't see a lot of pressure above that into the close, and you can see down here below 4,000 we don't have a lot of pressure down below there. So if you're looking to do a condor or something in that realm, you can see the key levels. Now pay attention to the zeros. The large last transition zone here is 40.50. We think that's important, and as I said, I think the 41.80 level up here is probably the most that we would push through if we do break through the zeros here at 41.25. Taking a look at the overall SPX structure, we are starting to see a build out in positive gamma. We think that's important. We did see a significant increase here at the 45.50 level. We're down here at 40.88. You can see the magnitude of 4100. It's a very big deal. And then we start into the transitioning area. 4200 is right here, and that really starts us entering into a positive gamma. This shifted yesterday. This was not of this magnitude. So we are seeing a build out in the near term, but you can see 4285 is still up there. You can see it's still very transitory. So not a lot of pressure yet to pull us upward. The expiration profile, we're seeing a significant drop in the monthly here for the May and the monthly for June here. We have net positive building, as we just said, for the expiry today. Very weak positive expiry for tomorrow and weak into next week. When we see this reduction here, we think that downside protection, especially given the overall news cycle and the climate, is we're going to have to see a rebuild. That does suggest the potential of moving south as this comes off. So next week, look for a little bit of downside action depending on how much we monetize out of this week. Taking a look at the combo structure, which includes after the May expiry. I've taken those off here on the right hand side so you can see this. You can see there's not a lot of difference here in the overall structure. If anything is significant, we lose some of the positive gamma here and we start introducing more transitory areas. We call these zeros or transition points, and basically it becomes less defined, less positive as we go through. So we're not bullish beyond this Friday, not as much as other people are, that, you know, this is a follow-through day and all that. We call hogwash to that. We do not believe that. We still have a tremendous amount coming off, and you can see even though we reduced significantly here from yesterday in terms of the net negative gamma, it's still quite a bit, and after Friday we're still very negative by all measures. This is still a very negative number after Friday. So we have to see this really be reduced today, tomorrow, and into Friday to have any confidence that we could be flipping, and we don't see it. Lines in the sand, we could certainly move between these ranges that you see here indicated by the blue arrows. Down here, downside 44,000, excuse me, at circle 2 is a big deal. Same thing continues all the way through the week. So we're not seeing just your eye can follow the structure here. It doesn't really change an appreciable amount between now and close of business Friday. So we think it's business as usual. We're not seeing massive changes here. So the summary for today, we are seeing short-term puts being closed. We think that could force prices upward in a slow grind. Again, all the stuff with Vanna and Charm, etc. Significant reduction in short-term GEX on Tuesday, pretty significant. So look for a continuation of put closures today and that grind higher into Friday. That being said, the net positive expiry for the SPX, the SPY, the Qs, and IWM today, especially since SPY, Qs, and IWM are equities settled, could put some downside pressure for today as those calls are monetized. So just be aware that we've got a yin-yang, push-pull type of behavior going on, short-term versus a multiple-day term here. We think the bias is upward in context of the put closure. There's far more of that coming off than there are necessarily calls being monetized. But note, we're not seeing those calls being bought except in the shorter term Qs. The SPY was flat, IWM relatively flat. So that's it for today. If you like today's content and want to discuss more, please join us at GammaEdge.us. That'll take you to a sign-up page, 14-day free trial, all the tools turned on. No risk to you. Come on in, meet the team, meet the traders, and would enjoy having you participate. Follow us on Twitter at GammaEdges with an S, and then of course watching here on YouTube. If you like today's content, please push that like button, and please follow us so you get notified the next time we post something. So with that, I'll bid you farewell. Thanks everyone for your time today, and see you in the Discord.